Let's get to that Fed day, that big Fed decision that is now less than 10 minutes away. And I'm pleased to say that we can go next to Steve Forbes, Chairman and Editor-in-Chief of Forbes Media. Steve, I want to talk to you about some of the politicization of the Fed. Elizabeth Warren in the last few days has come out and said she wants 75 basis point cut. A lot of people would say that that means you want to juice up the economy as we are heading to the polls. The next Fed meeting is the day after the election. We can all wait until then. Chris Waller, though, who many think is in line to succeed Jerome Powell if indeed Trump wins, pushed back on that. And he said, you know what, president or people in Congress, they can criticize our job, but it's our job to also push back and not listen to them. Are you still confident in Fed independence?
Well, the key thing is not Fed independence. Does the Fed have the right model to make its decisions on? And the answer is profoundly no. It believes, and other central bankers believe, that you conquer inflation by depressing the economy. They don't realize the basic definition of inflation is reducing the value of the currency, usually by creating too much of it. So if they focused on the value of the dollar, the economy, as Art Laffer pointed out, can take care of itself. The Fed should not be in the game of interest rates. And by the way, if you're looking at interest rates, the key one to look at is not the federal funds rate, which doesn't mean anything anymore, but really what the Federal Reserve pays on bank reserves. They hold hundreds of billions of dollars of bank reserves. The interest rate now is over 5%. That has a profound impact on the ability and the willingness of banks to lend money. So if I see that rate come down, then I think the Fed is actually getting out of the way and letting the market start to function again. But that's the thing to look at, but it gets no coverage.
I want to get a little wonky with you, if I may, because it's Fed Day. A lot of people look at some of these models and they're thinking that the inputs aren't as good, and so then the outputs aren't as good. People criticize the jobs data that comes in, and then you wake up and there's 800,000 fewer jobs than what was initially reported. Right. Are you confident in the models and the data collection so that we at home can believe the numbers that are being reported?
The answer is no. Every month in the jobs report, you always get a revision of the previous 2 months, usually downward. Right. So the headline number may look decent, but then when you dig into it, ooh, not so good. And this gets to the point. The Fed should not be trying to manipulate the pace of the economy. They should not be worrying if the economy's doing well. You start to hear the word overheating. Yeah. Now, if you get a raise in pay, do you start sweating? Do you start to at night, oh, take it away because I'm overheating? It's preposterous. It's absolutely preposterous.
You know, it's interesting because you're talking about the Fed not getting involved. And the first time around when Jerome Powell wanted to raise rates, because it was pre-COVID, and it was because the fundamentals of the economy were strong. And ultimately, savers have been punished forever. And I think that he thought it was time to slowly start taking those rates up. I actually agreed with him, even though there was some pressure from Donald Trump to take the rates down and stimulate the stock market. When we're looking at what's happening right now, if Donald Trump were elected, the policies we just discussed with Art, pro-growth policies, and he gets this economic engine churning again, I don't think the rate cuts would feel as important as they feel at this moment.
Sure. And that's why the rate cuts, cutting income tax rates right now is more important than manipulating interest rates. So if the Fed just backed off, let the economy take care of itself, it's big enough to take care of itself, 26 or 27 trillion dollars, and let it do its own way. So if the economy, people have to pay more to borrow, the markets take care of it. It's like what the Fed's trying to do is the economic version of rent control. We know rent control doesn't work. They're trying to rent control interest rates, what they used to call renting the money. And that's what an interest rate is, the rent you pay on the money. So they should get out of the rent control business and let free markets work. They usually do.
This is such a master class. I mean, Steve Forbes, Art Laffer, back to back. I am pinching myself. Let's play forward though. Okay, so we've got today in the rate decision, but then we've got 2025. Okay, where do you see rates going? How do you think this develops, given what you see in the economy right now, given where the Fed is? What are you looking at for 2025?
Well, the danger of 2025. Let's look at a scenario. Trump wins. Republicans get control of the Senate and the House. They don't need to undo a filibuster to get their budgets through. So let's say they put in good supply side policies. We've produced energy up to our capacity again. Economy hums along. Then the Fed's going to come along and say, Are we overheating? So I worry about the Fed. And we saw this back before any of you were born, back in the 1980s, after the Reagan.
Now, come on,
We were
Steve.
all here.
Come on, Steve. Give us a little credit. We've been around a little while.
We look
But thank
good.
you. Thank you
We'll
for the
take it.
compliment.
I'm trying to be complimentary. Obviously, it didn't work, which I tried it in politics, which is why I'm here today instead of my presidential library.
That's good.
But back in the 80s, when the Reagan policies came in, inflation was conquered, the Fed started to worry, oh my gosh, we're growing 6 or 8%. This is something to worry about. They're the ones who are overheating, not people.
Wow.
Well, Steve Forbes, I think Brian said it best. We just got a master class in Fed and economics and fiscal policy.
Totally.
Really appreciate your time.
Totally.
Thank you
Thank you.
on
Good
this
to be
very
here.
special
Thank
Fed
you.
day.